Hi, this is Jason Fielder with the Daily Forex Report for December 16th. We're going to start off with the US Japanese yen pair. I'm expecting this pair to move as high as 91.50 and as low as 87.54. Now look for some resistance to pull into this market around 90.20 and look for some support around 88.25, which we're headed down towards that number. This particular pair is moving lower, definitely moving to the downside. I'd like to see a close below this low, and we should really start seeing it move if it does that. If we don't, we could get it either moving sideways, which is most likely what will happen, or we could get a small pullback and then move sideways before heading on down. Now switching over to the Euro USD, I'm expecting this particular pair to move as high as 142.61 and on the lower side 134.98. Now look for some resistance around 142.71 and look for support around 138.81. This particular pair did move higher. Something I did want to show you, although if you zoom out a little bit, that's probably a little too much, and you throw some Fibonacci retracements on, you're going to find out that we are pretty much right shy of the 50% retracement by about 30 pips so far. So, and we also, if you notice here, we have some previous support that we have closed above, but if you take a look at it, at the where this particular support closed, we closed below it. So we could definitely see a retracement occur back down, to the lower, back down lower to around 1.3800. Now with the FOMC announcement being what it was today, if you didn't hear, the Fed dropped rates. Instead of having an actual target, they're going to have a range now for the first time, and that range is going to be between 0 and 0.25% or 25 basis points, which I think will be negative for the dollar long term. If you go to a weekly chart, you can definitely see that this downtrend that we've been in has started to turn around, at least for on the weekly time frame for this particular week. And if we continue higher or don't pull back, if we don't drop below this 38.2% retracement, even if we pull back a little bit, but then don't close below it and head higher again, look for a break of this 50% retracement for basically to go long and for it to for this particular pair to head back up to these ranges that we've been at previously. I could definitely see us hitting those pretty quick, especially if you look at the ground that's been covered from this point up to here, and we're only talking about a week's worth of time. So these are all things to keep in mind. Now let's take a look at the pound US dollar pair. This particular pair also surged higher. For the most part though, this pair is moving sideways still. It did close above our previous resistance, so we could see this particular pair move higher as well. I am looking for this pair to move as high as 157.79 and on the lower end 150.13. Now look for some resistance to pull in around 157.47 and look for support around 154.73 for this particular pair. Now let's switch over to the US Swiss. This particular pair, I'm going to zoom in a little bit. This particular pair is moving lower. As you can see, we broke some previous support but closed above it. It'd be real interesting to see what this particular session does. And if it does close below it, then we could see this pair move pretty quick down as it moved up previously. I am expecting this particular pair though to move as high as 116.87 and possibly as low as 110.59. Now, something that I hadn't mentioned, didn't have it on the chart, there we go, is that we had an overextended trade today that was triggered. As you can see, the market's already pushed pretty low and pulled back just a hair, but we should see it. The odds are that it will retrace to that low. Same thing for the US, the Euro USD. We have an overextended bar. And interestingly enough, if you use this indicator, when you see them start to stack up right in a row, that usually is a sign that we're in a trend or headed into a trend. So that's definitely something to keep in mind as well. Let me zoom out. Maybe we can get some more of these. Here's an instance where we had a couple in a row. If you notice here, it's moving lower. We had 4. They're spread out a little bit, but it is moving lower. Same thing here with those two. So it's something definitely to take note of. If you see several in a row, especially with these strong uptrends, we broke some resistance. We have an overextended bar, then we have another overextended bar. I know you're getting into it a little bit late there, but you could grab a lot of pips between here and here. So it's definitely something to take note of and to look into. Now, the pound had their CPI report released today. It was worse than expected. Year to date, it came out at 4.1%, down a little bit from 4.5%, but it was worse than everyone had expected. Now, the US CPI report was better than expected at 1.1%, down from 3.7% year to date. And of course, the FOMC announcement was released today at 2:15, and we've already talked about that they lowered the rate and are looking for a range. Now, looking ahead for tomorrow, we have the pound releasing their jobless claims change for November at 4:30 a.m. Eastern Time. Consensus is that it has gone up from 36.5K to 45K. We also have the Euro CPI being released for November at 5 p.m. Eastern Time. Consensus is that it has dropped from 0.0% down to negative 0.5% for the month of November. Year to date, they're expecting it to drop from 3.2% down to 2.1%, which would be good for the euro. Well, that about does it for today. Until tomorrow, this is Jason Fielder. Good trading.